Hello, and welcome to Financial Fluence. Today, we'll be talking about how you can make your money work for you. What can we legitimately do to make it happen? We're not just talking about turning $1,000 into $10,000. We're talking about financial techniques that operate on both a micro and macro scale. Number 1, consider money as a renewable resource. Changing your mindset about money is essential to getting money to work for you. How do people who have access to a lot of money make the most of it? Can you still make it happen if you only have a little? Yes, it's a resounding yes. Changing your perspective is the first step toward overcoming a negative mindset. Stop convincing yourself that you don't have enough time, money, or connections to advance in life. Start modest and work your way up to larger, more significant investments. So what exactly is a renewable resource, and how does this relate to money? According to the definition, a renewable resource is one that may be used repeatedly and does not run out because it is naturally replaced. And when your money is working for you, that's exactly what it's doing. It doesn't run out and is replaced organically. Number 2, put your money to work. Now is the time to give your money a purpose. What exactly do you want your money to accomplish for you? You must give your money a job description so that it understands its function. Let's start with a basic example. You deposit money into a bank account and it earns interest on it. Your money is sitting there, earning a modest but consistent profit for you. It's working, but not too hard. Level 2, you buy a work of art or a collectible and wait for it to gain value. Value vintage Lego is also seeing huge returns, so you can't go wrong splurging there. Level 3, you buy ads for your goods, measure the profit from the ads, then reinvest the profit in more ads. The cycle continues. Your money is being used to generate a steady stream of revenue, while also raising your interest with each cycle. It's the ideal example of money acting as a renewable resource. You are the money's chief executive officer. Now it's time to step into the job and get everything running well. Number 3, REITs, real estate investment trusts. When you think of real estate investing, you usually think of buying a property, fixing it up, and renting it out, which is fine. As we indicated in point 2, it's a good investment. Consider investing in a real estate investment trust or REIT if you don't want to wait a long time to reap the benefits. More diversification, bigger returns, and lower total risk are all advantages of this method. They're worth looking into because they offer dividend income as well as capital appreciation. After all, who says you can't have your cake and eat it too? It's a fairly hands-off property investment because the costs are modest and you don't have to actively manage the residences. Number 4, play it safe. We won't go into too much detail here, but you're bound to know something about each of these possibilities, and they're ideal if you want to keep an eye on your cash flow and how it's performing at all times. The obvious alternative is to pay off your debt. After all, as the Yiddish proverb goes, interest on debts grow without rain. A 401k plan, which offers funds ranging from conservative to aggressive, is another viable alternative. Bond ladders are a good way to generate passive income, or you may buy a high-yield CD. The benefit is that you can choose an internet bank that may provide greater rates than your local bank, and your money is safe as long as it's backed by the FDIC. Investing in your children's college education could potentially pay off, but that's a long way off, and you'd have to start when they're little to get the most out of the savings and interest rate. In some areas, if you contribute a significant amount to the fund, you may be eligible for tax rebates. Number 5, put your money in a parking lot. Making a lot of money is not the key to prosperity. How you handle it is, Dave Ramsey once stated. And at some point during your financial journey, you'll determine that it's best to park your money because financial institutions will be lining up to receive your funds. You'll need to be strategic about where you park them. Don't be deceived by the razzle-dazzle. Talk to your advisor first before making any judgments. When selecting a short-term savings account, keep the following factors in mind. Access. How often will you need access to this account? A 30-day call account will have a higher interest rate than one that may be accessed at any time. If it's a minimum 12-month fixed deposit, the interest rate may be higher, but you won't be able to withdraw money whenever you want. Interest rate. This is the most obvious factor to consider. Browse around to find the best interest rate. Penalties. What will the penalties be if something happens and you need to retrieve your 12-month deposit? And service. Check around to see who else has had a good experience with razzle-dazzle salespeople. They often lose their spark, leaving you frustrated, annoyed, and without access to your money. Number 6. Trade-ups. One red paperclip is an astounding true story of a man who bartered his way from a red paperclip to a house in 14 trades and under a year. Kyle McDonald was inspired by the game Bigger Better that he used to play as a kid. Maybe you don't have $1,000 lying around right now. Then what do you have? This is when it gets interesting. Perhaps you're establishing a health screening business where you go into corporations and devise specific plans for each employee to perform at their best. You have the ability to execute the job well, but you don't have the funds to build an amazing website. So you approach a web design firm and offer your services in exchange for a website. It's a win-win situation. You get a wonderful website, and they get healthy, happy employees. The options are limitless. Number 7. Peer-to-peer lending, also referred to as P2P crowd lending or social lending. This activity is gaining popularity as a reliable strategy to increase your wealth. Before we get into details about the concept, if you need a loan but don't want to go through a bank, you might want to consider this option. So a P2P lender is an individual or a group of individuals that lends money to others. If you want to be a lender, you must apply through certain websites, and each site has its own set of laws and restrictions. P2P lending has expanded by 110% annually since its inception in 2005. The loan rates, eligibility, loan quantities, and clientele of each lending site vary. One of the biggest benefits of joining a peer-to-peer lender is that you may start earning money right away, so that you can instantly reinvest your interest in the loan program. As an investor, you must select which risk category is appropriate for your money. The riskiest alternatives might pay as much as 17% interest, while the least risky ones can offer around 5% interest. Number 8. Swimming against the tide. We won't get into investing right now because we already know that if done correctly, you can make a lot of money. Where the real money lies though is when you travel the opposite way from everyone else. It's fine to buy stocks because everyone knows they're doing well, but many investors are hesitant to invest in a company that is experiencing a downturn. When the market falls, many investors are hesitant to buy, preferring instead to wait it out. However, this is frequently a great time to buy. Shares are less expensive, and if you have the time to sit and wait, your money will do the work for you without you having to do anything. You get recessions, you have stock market declines. If you don't understand that that's going to happen, then you're not ready, and you won't do well in the markets, said Peter Lynch, one of the most successful and well-known investors of all time. And that's all for today. Thank you for watching this video. Don't forget to like it, subscribe, click the notification bell, and leave your thoughts in the comments section below. See you again soon.